Hey guys, welcome to the show, The Conversation. I'm your host, Jennifer Tapiero. Today, we have Matt Markiewicz from THCx, the cannabis ETF, chatting about tax laws. Maybe you invest in the cannabis industry and you want to know more. All right. Hey guys, welcome back to The Conversation. I'm your host, Jennifer Tapiero. Live from New York City, joining me in the studio is Matt Markiewicz from the THCx, the cannabis ETF, to chat about tax laws harvesting. Maybe you guys invested in cannabis and you want to know more. Matt, welcome to the show.
Thanks for having me.
How's it going?
Going well.
Tax laws harvesting in the cannabis industry. Break it down for us.
Well, again, it's very focused, sort of tactical idea here, but for anyone who is invested in cannabis stocks or potential ETFs over the past year, let's say, you're looking at a loss, meaning the stocks are down, lower price than where you bought them.
Right.
Not a good thing.
Not a good thing.
However, if you have a broader portfolio of stocks and you are looking to sell those stocks potentially before year end, you will have, most likely gains in those stocks. The S&P 500 index is up 22% year to date, trading near a record high. And if you want to take some of those gains in other stocks, there's something called a tax loss harvest, and you essentially will look for ideas where you have losing positions. So cannabis is down industry-wide just about, so you would sell some of your cannabis stocks and offset the gains in your non-cannabis stocks with said gains in cannabis stocks.
Break it down for us in millennial talk. So for people that want to maybe invest now in cannabis, what should they do?
Well, there's a good chance that a lot of the millennial investors who may be watching or listening invested in single stocks like Aurora Cannabis, Kronos, Canopy Growth, Afria, Hexo Corp, or maybe some of the U.S. multi-state operators like Acreage Holdings or Green Thumb Industries, Cresco Labs. You're most likely going to be down on those investments, meaning you're on paper anyway, you will realize a loss if you were to sell those stocks right now. So again, the idea is to sell those stocks. If you're still bullish on cannabis, use those losses against gains you might have in other areas of your portfolio, and then you transition some of that money from the losses into a diversified, tax-efficient liquid vehicle like an ETF, for instance. So you're getting still that cannabis exposure that you're looking for, but at the same time, you're not taking the risk in one or two stocks, which are A, extremely volatile, B, you are betting just on the growth or no growth or whatever it may be of that company. And because of that, you're essentially putting all your eggs in one basket when you're investing just in one or two single stocks like Aurora Canopy. Both of those stocks, by the way, the millennial investors that may be watching, they may have a Robinhood account or a Webull account. They're these free trading platforms. You can buy smaller amounts of shares. Cannabis stocks are some of the most popular stocks, widely held stocks on these platforms. And again, so you are having a lot of investors that are, facing losses in these stocks. And because of that, you probably might want to think about reinvesting that into a broader, diversified vehicle like an ETF.
Like THCx, the cannabis ETF.
That's an option.